Hello guys, welcome to the 3D market commentary today. Apologies, I don't have my camera today, so you're just going to have to listen and rather than see me, but hopefully obviously still makes sense. So let's just make sure we've got the disclaimers up on the top left hand side. Please read them, obviously not just for legal reasons, but also to understand what you can expect from these kind of videos. Now the other thing is down here are my email addresses, or different email addresses that you can send questions to. There's becky@tradictive.com, this one here, and there's also support@tradictive.com, so you can use either one of those if you have questions. There's also another link you can go to, which is tradewithufos.com/Becky, and from this link you can get different apps and platforms. You can get one-on-one coaching if you want, and you can come down here and you can post questions in a public environment, which means that we can answer the questions publicly, you can post them publicly, and everybody learns from this same place. So ideally, this is where you'd go to post your questions rather than email, but either way, whatever's more comfortable for you. Okay, so the 3D market commentary, this is a video where we discuss and we expand on an email that we send out every day to our free members. So if you're not already a free member or you don't already get that email, just email us and we'll be able to help you with that. What this email goes through are 3 different elements of the markets, and we look at 5 major markets each day, and we go through the 3 major statistical elements that we cover. That's why we call it a 3D approach. Now the first element that we cover is called market climate. Essentially what this means is, where do we have upcoming probabilities? Is the market likely to go up? Is the market likely to go down, or is it not likely to go anywhere, in which case we have a better idea of whether or not we buy, sell, or do nothing. Now we use an app called AutoClimate, which is a free app on most platforms you can get it on, and AutoClimate helps us with answering this market climate question. If it's a thick red dot, that tells us probability is down. If it's a thick blue dot, that tells us probability is up. If it's a thin dot of either colour, that tells us probability is in neither direction. So that's AutoClimate and market climate, and we'll look at that per market to see where the probabilities lie. Then we look at buy and sell UFOs. It stands for unfilled orders, and essentially what it means is, where are the buyers? And we see them here with our green UFOs. I don't know why that happens to my arrow sometimes. So we have a green UFO showing us where the buyers are, and then the red UFOs show us where the sellers are. Now, why do we want to know that? Because lots of buyers are likely to push price up. Lots of sellers are likely to push price down. So we can get a better idea of where price is likely to turn from, where it's likely to hit an area and move and go up, or hit an area and move and go down. So we'll look at that per market, and we'll look at market volatility. How quickly we expect these markets to move, or how far we expect them to move within given periods of time. So that's what we'll go through per market, starting with the S&P 500. Now everything we're looking at is on a daily chart. Of course, different things happen on different time frames. Everything we cover here is relevant to a daily chart. So for the S&P 500, which is the top 500 US stocks, we have a confirmed upwards climate, thick blue dot there on our AutoClimate app, probability upwards. Now we do have sellers just above us, so be aware that they could push price down. That's between 47.12 to 46.71.75. So what we have at the moment is we have buying pressure coming from the climate, but we have selling pressure coming from these sellers above us. So personally, I would say it's not a clear run in either direction. We've got conflicting statistics, which means for me, I'd just move on. No point trading something that you don't have fully aligned probabilities. Now, when it comes to volatility, we'd expect the S&P to go up or down in 1 year of 20.91%. So that means in a day, up or down of 61.57 points. In a week, that would be up or down of 135.54 points. And in a month, up or down of 282.15 points. So that is market volatility for the S&P. Overall, for the S&P 500, on a daily chart, we've got conflicting information, probability coming up from the climate, but sellers pushing price down. So whoever wins will be what obviously pushes this price up or down, whether it's buyers or sellers, and then we'll have a clearer idea from there where we have more aligned probabilities. For now, nothing to do there on the S&P on a daily chart. Now, let's move on to oil. Now, just before I move on to it, have a look here at the different courses that we do. We do courses in futures, stocks, forex, backtesting, trading plans, and psychology. Now, most of these courses come with a 3-month complimentary access to the apps. AutoClimate is a free app. On most platforms, you can get it on anyway. AutoUFOs, which show us where buyers and sellers are, is a monthly subscription type model. Depending on which platform you use, depends on the cost of it. You can subscribe directly to the AutoUFOs. You don't have to have a course in order to get them, but most of the time it's cheaper to get a course and the UFOs than it is to just get the UFOs. So check that out and see what works for you. Now, having a look at oil, we have an unconfirmed climate here. That's a thin dot on our auto climate. That's telling us not enough probability either way, therefore do nothing. Now, we do have buyers beneath us that could change things for us. They are between 69.49 to 62.43. We're obviously much closer to the buyers than we are to the sellers that are up here at 79.23 to 77.98. So overall, unconfirmed climate, not enough probabilities either way, but I wouldn't be surprised to see these buyers push us further to the upside, but we'll see. With volatility on oil, we would expect it to move up or down in 1 year of 47.43%. In a day, that's 2.13 points up or down. In a week, that's 4.69 points up or down. And in a month, that's 9.76 points up or down. So that is crude oil. So the next market is gold. As I load this, just to point out down here about coaching and support that we offer, we do a bunch of coaching and support for free on various platforms. So please join us on YouTube sessions and Facebook and LinkedIn and all that kind of stuff. And we also have a closed coaching session, which is a small monthly fee, which gives members access to more of our time in closed environments. But like I said, we do a bunch for free as well. Okay, so looking at gold, we have a confirmed downwards climate, thick red dot, probability down. We have gone past what would be normal in terms of a move to the downside, so we are overextended, so bear that in mind. We have sellers up here at 1873.3 to 1844.2, and we have buyers down here 1652.8 to 1624.4. We're nowhere near either of them, kind of sat in between. So for the time being, probability down, coming from the climate, but even then it's overextended, so only slight probabilities down, shall we say. In terms of volatility, we'd expect that gold would go up or down in 1 year by 16.7%. So in a day, that's 18.63 points up or down. In a week, 41.01 points up or down. And in a month, 85.38 points up or down. So that's gold. Okay, next market is the US dollar. As I load that, just want to make a point about the fact that everything we're talking about here is of course to do with statistical likelihoods and probabilities. Doesn't mean it's definite, doesn't mean it's guaranteed. Of course, there are times where things go away from what might be expected to happen. So we manage our risk just in case, always. And of course, we also want to make sure, or we might want to make sure that we layer extra things on top of this to increase our probabilities even more. So with the US dollar that we have in front of us, we have a confirmed upwards climate, thick blue dot, probability upwards. Now we're at the start of what would be a normal move to the upside, so likely that it continues, or more likely that it continues to the upside. We have buyers down here at 95.595 to 94.965. They've already worked once to push price up. Price came in down here and was pushed up and moved up from this buying area. That's why we want to know where the buyers are, because they give us an idea of where price is likely to move up from. Now we do, of course, have sellers on this chart as well. We have sellers up here at 96.94 to 96.66. If price were to get there, of course, wouldn't be surprised to see those sellers push price down. But for the time being, we've got a little bit of room to reach them. So overall, probability to the upside here for the US dollar. In terms of volatility, we'd expect that the US dollar would go up or down in 1 year by 6.57%. So in a day, that's 0.4 points. In a week, 0.88 points. And in a month, 1.83 points up or down. So last market is backed Bitcoin. As I load this, just to point down here to our top platform. Top as in TRADDICTIV Options Planner. Still helpful though, even if you are a futures trader or a stocks trader. I personally use it for stocks. It has loads of inbuilt technology and really great usability. So check that out. So when it comes to Bitcoin and what we're looking at here, we have a confirmed downwards climate, thick red dot, probability downwards. Now we have sellers literally just above us that we are within right now, actually. So it's between 51,975 to 46,650. That's where we have those sellers. Like I said, we're within those sellers right now, pushing price down. Now we do have buy orders quite a way away at 32,820 to 31,615. So we've got quite a bit of room for price to move down and reach these buyers. So basically, overall, probability to the downside quite overwhelmingly here for Bitcoin. Now, in terms of volatility, we'd expect Bitcoin would move up or down in 1 year by 89.81%. In a day, that would mean 2,732.43 points. In a week, 6,015.17 points. And in a month, 12,521.57 points. So that's our last market. We've now looked at each of our 5 markets, and for each of them, we've looked at market climate, where we had probabilities up or down or nowhere, and then given us an idea of whether or not we should be buying or selling or doing nothing. Then we looked at buy and sell UFOs. Where do we have big stacks of buyers and big stacks of sellers that could push price up or down, respectively? And then we looked at market volatility, how quickly we expect these markets to move. So let's just look at our last thing before we round off here, which is our weekly economic calendar. We get this from fxstreet.com. We filter by high impact news, which means we want to know the scheduled news reports that are coming up that could affect the markets that we might be trading. So today being Friday, we had some news early morning in the States about the euro, or about European markets. We have some news coming out very shortly and earlier on this morning in the States for the US dollar or US markets. So be aware that we might see some movement on those markets. That's increased volatility, which could mean increased risk, could also mean increased reward, depending on which side you're on. Just be aware of it. And if you have any questions, you can email me, of course, but ideally you'd come here, tradewithufos.com/Becky. You can post questions down here in this area in a public environment. I can answer them there and we all learn from the same place. Or you can come up here, get different apps and platforms, some of which are free, and you can book one-on-one coaching as well if you'd like. So I will leave you guys now. Hope you have a great end to your trading week. Hope you have a great weekend ahead.